What's going on, guys? Bexio back, and today we got a brand new video looking at Snapchat because it is bringing down the entire stock market with its new revised guidance into just 1 month into this new quarter. They reported earnings last month and they are already revising their guidance, saying they're not going to hit the numbers that they said they were going to, which is very bad news and affects other companies, even the big $1 trillion companies like Google. They are getting affected from this because it's all advertising related. I mean, we can see right here Snapchat down over 41% on pace for its worst day ever, dragging other stocks with it. And it's just all about the advertising and missing those numbers. Snapchat is an advertising play as much as Google makes money on advertising, Facebook makes money on advertising, even Amazon has a little bit of advertising into it. So this is bad for all of those companies. And we can see Snapchat's plunged 41%, putting the company on pace for its worst day ever, dragging down other social media and digital ad company stocks. So there you go, worst of both worlds too. So anything social media and advertising related, which is both Google and Facebook, have both social media stuff as well as ad plays, and you have Twitter in there. It's just a mess for all of these companies. The tumble comes after Snap issued a warning on Monday to investors, saying it won't meet its own targets for revenue and adjusted earnings in the current quarter. That is bad. It's been 1 month since they reported earnings, since they put these adjusted earnings and guidance out there. 1 month into the quarter, they're already looking at it saying there's no way we're hitting our numbers that we said we were going to hit. That if that doesn't tell you the state of the economy, don't know what will. But it says since we issued guidance on April 21st, so literally just barely a month ago, the macroeconomic environment has deteriorated further and faster than anticipated. That screams how much the economy is crashing. People are not spending money. They are buying essentials only. They are not trying to buy luxuries or fun things. The inflation is making things terribly hard and obviously reflects in everything. And advertising gets affected very bad from this because if people are only buying essentials, you don't have to advertise, come buy bananas. People are just going to go buy food. You have to advertise other luxury goods, and those, even if you're wasting money advertising, won't convert into sales because people aren't spending money. So you can see some of the companies affected from this were things like Meta was down more than 8%, Roku fell, Pinterest dropped, Google dropped, and Twitter dropped, which are these are pretty big companies. I mean, Google's $1 trillion company, one of the biggest in the world. Meta is almost $1 trillion company, one of the biggest in the world still. Roku had massive gains from 2020, so maybe it's given all of that up. Pinterest was an interesting play, kind of getting interested in all this. They're down. Twitter, obviously, Elon Musk stuff, everything going on there, they've even fallen as well. You can see Morgan Stanley analyst saying we expect all online ad platforms to feel some impact of a significant consumer pullback. I think everyone should be expecting that, especially now. Snapchat, it's definitely going to affect other companies, but I don't know if advertising is super popular on Snapchat. Obviously, they make a lot of money on advertising on Snapchat, but like Google, if you're going to only advertise on one platform, you're probably going to pick Google or Facebook, which is Instagram and Facebook and all that stuff. But you're probably going to pick one of those two and not pick Snapchat. So it could maybe be overblown that Snapchat just isn't going to get the ad dollars because the conversion or the target audience that people want to target can't be reached on Snapchat or can't be easily reached like they can on Google or Facebook advertising. At least you can have some sort of positive thing, kind of thinking that maybe this is overblown and it's just Snapchat getting less of the share of ad revenue than other companies. But it's obviously definitely could affect other companies and could be way worse than we're thinking. If you're thinking like it's Google's gonna be fine, Facebook will be fine, but maybe their numbers are getting hurt very bad as well. And you can see all the fears here that has just been the talking point of the market. Fears around inflation, interest rate concerns, continued supply chain issues. The war in Ukraine have forced advertisers and brands to rethink ad spend in the current quarter. We all already knew this. It's always been these types of macro events. This has been what we've talked about for like the last, since this year started, was all these macro events that are just pounding the market down, pounding share prices, affecting every single asset in the world. And it's out of, the control of these companies or anything. You just kind of have to wait until it gets over, gets resolved, or something happens where we don't have to continuously worry about all this stuff anymore. And if you look here, we can look at Snapchat. We can see the big gap from right here. This is the day. So gap down from like $22, $21 all the way down to where it is now, $12.88, just around there. So crazy gap down for Snapchat. But if we zoom out even more, we can see that the price of Snapchat has fallen to levels basically where it crashed to in 2020. So we're still trading, or we're trading at 2020 levels right now. So just a massive move up and all the way back down to basically the almost the exact bottom of 2020 prices, almost right there, right before it started rallying. So crazy to see where all these companies are going to. We can look at things like Google too. They had, if you look at their daily, they had their little gap, but it's been bought up pretty good. So the little gap down from 2176, and it fell all the way to just over 2000. Now it's at over 2100. But Google getting affected by this, not being able to just kind of sly away from this news. And if we look at Google's weekly, we could see Google trading at 2021 levels, like just into the new year 2021. So again, these companies are giving up massive gains that were gained over a year period, giving it up very quickly here in just the beginning of this year. So a lot of bad things. And another company, just to look at Amazon, because we know that Amazon has a little bit of a advertising play, and you can see massively fallen. This is the weekly. Zoom into the daily, we can see it did fall a little bit, less impacted because advertising is a less big play in Amazon, but ultimately kind of falling from 2150 down to where it is just below 2100, but going down to levels that Amazon was trading at, like 2000 levels in 2020. So Amazon, a $1 trillion mega corporation, is trading at 2020 level prices before it had a huge boom and everything was crazy. And you have hiring problems at Amazon because this huge boom that they had, and it was a massive boom. Everyone was using Amazon. They needed more people. They were hiring like crazy. Now, Amazon, less people are using it. More people are saving money. Less people ordering stuff and maybe just going to their grocery stores to buy food, and that's it. Amazon suffers. And all the hiring they did on this whole way up and held up here on this way down, they're going to be laying people off or firing people and getting rid of staff because they don't need them, and it's an expense. And it's a way that they can save money and have better revenue and profit numbers than having to pay people that they just don't have the work for them to do. And we're seeing this time and time again in businesses where Uber slowed hiring. Snapchat said they're slowing hiring. Now we have Klarna, I think they're Swedish company, but they boomed during the beginning of the pandemic. They were doing great business. They're a tech company. Now they're going to lay off 10% of its workforce, sourcing economy hits buy now, pay later space. So they're a buy now, pay later company. This space, obviously, people are buying necessities, not buying things that they want or would be luxuries. That's the big topic right now. And they're laying off 10% of their workforce. And you see the Swedish buy now, pay later firm is reportedly looking to raise fresh funding in a round that will reduce its valuation by a third. They're a private market company. In private markets, you don't see reduced valuations. You see people getting values go higher and higher and higher as the company continues to grow out or has big growth plans. And now everyone looks at this, and this company needs some money. They're laying off workers and they need money to survive, probably. And they are lowering their valuation by a third to get some money. And you just don't see that in the VC private funding space. They always throw money at apps and tech that they think could be big. They never cut values. So to see it happening is a big red flag, as things are getting really, really bad in investing space, in the economy, in the outlook of the economy. Things are just not in good spots. So you just put all that together, the layoffs and tech getting very, very disrupted right now, getting hit hard. Snapchat advertising getting hit hard. That affects even the big trillion-dollar companies, the mega corporations, Google, Amazon, Facebook. All these companies are just getting affected by this. And what we could see now is obviously a slowdown in everything economically, but those big companies, the Apples, the Googles, the Microsofts of the world, could be acquiring some of these companies for dirt cheap. As we saw, Klarna has to raise money at a less valuation because they're probably in need of money, or they're going to go away and they're going to die as a company. So if they can do that, they can pitch themselves to Apple, to Google, and say, hey, will you buy us? We'll buy our company. We're at this price. But those big companies, they're gonna see this and say, we'll buy you for half of what you want, and you're going to have to take it. So it's going to be a pretty rough market for even private markets, public markets. Investing as a whole is just very in a tough spot right now. That's going to do it for this video, guys. As always, don't forget to smash the like button and subscribe. We're on the road to 1,000 subscribers. I'll see you guys in my next video.